here's how rising inflation and interest rates affect you.
So guys, interest rates and inflation do work together. Now, the interesting part is we've been in a very low inflationary environment for the last 20 years. Usually interest rates, it's funny, people don't like interest rates being increased. But what that usually means is interest rates are being increased because things are going so well, we need to slow down a little bit. If inflation starts to ramp up, it's usually because business is going well, people are being hired, wages are going up because of more competition for workers, right?
Yeah, I had to grasp this. The Fed raises rates to slow things down.
Yes. So you would sit there and think that raising interest rates are because things are going well. But we don't look at it that way. The market looks at raising interest rates as poo, this sucks. Now, does it affect you? Absolutely. Back in August, the 10-year treasury was 1.18%. It is now 2.9%. What has happened to 30-year mortgages in the last 6 months?
Skyrocket, I would say.
Skyrocketed.
I mean, I was trying to get in under 3, Paul. I finally got in at 4.1, but now it's at 5.
Yep, it's at 5. So it costs you more money to own a home. It costs businesses more money to borrow and grow. These corporations out there that all have debt, they have a lot of debt lately because interest rates have been so low. They now have to, when those debts become due and they have to refinance them, it's going to be less profit for their investors. It affects everyone down the line. How much does it pay to hire anybody today to do anything?
You're right.
It's insane, right? I mean, 3 years ago to get tile work done in my house, $4 or $5 on the high side per square foot. Now I'm lucky to get $8 or $9. It's just doubled. That's just the cost of inflation. That's it. And interest, by the way, is the cost of money essentially, right? You have to pay interest to get money. I want to go to the bank. I want to borrow money. What's your cost? It's the interest rate. So the higher the cost, the less likely you are to borrow money. The lower the cost, more likely you are to borrow money. When you borrow money, you buy things, which employs people. You start businesses, you expand businesses, you do all these things. When interest rates are higher, you don't do that as much, right? Is that a good thing? In and of itself, it's not good or bad. Do we like having 3.6% unemployment? A lot of people would say yes. But then when you find businesses have to raise their prices in order to hire people because there's such a low unemployment number, is that a good thing? I don't know. Does it affect a guy like me? Not as much. Why? Because I have plenty of free cash flow. Doesn't matter to me if I have to pay 20% more for a gallon of milk. But for the average family who's making $60,000 a year combined and they have 2 kids, that affects them a lot more. Inflation does hurt average America more. But they also get higher wages. It all works together in a big, and it's really hard to just sit there and say there's one set solution for it. But just know that if you're paying more, everyone is paying more, all the way top to bottom. It affects certain people more than others, but all the way top to bottom, it's affecting people. Is that a bad thing? It can be. But the other thing is we've also had supply chain issues. A lot of inflation is a bad thing for people, right? The average person, when they see the gas prices at $5 a gallon,
yes,
and it's hard for them to have gas, they don't like that. That's what higher interest rates are going to do. It's going to keep those down. When you make it costlier to borrow money and to grow, things settle down. It's a balancing act. Nothing is just on one domino, good or bad. There's a trickle-down effect to everything.
Why can't they just keep it low, Paul, and just let us have cheap everything?
So that's a good question. So the Fed has the mandate of, their original mandate is price controls, inflation, right? So they use interest rates to keep inflation a certain number. That has changed over the last few decades because of internet and people having access to these Fed people very publicly, et cetera. Why do they not keep interest rates really low? I mean, do you want costs increasing 10, 15, 20% a year?
Yeah, I'm seeing those costs. 8 months ago, we wanted higher wages. We wanted businesses to open up. We wanted everyone to get paid more money, and then now we're seeing it at the gas station. Everything just costs
Not
more.
only that, and interest rates are just the way that the Fed uses to control those price movements. The higher interest rates are, the less price growth is going to be. The lower interest rates are, the faster price growth will go.
Should I be worried as a normal viewer out there?
So if you're on this channel, you found us, you're probably interested in money, you're interested in investing, interested in saving. This is why you save money. Because when times are tough, you can cut back your savings a little bit while you pay for the extra things you need. And when times get better again, you can put your savings back up. But if you're living paycheck to paycheck, that is the risk you have when you see costs go up. Living paycheck to paycheck will hurt you in that regard. Buy a house you can afford. Don't buy the most expensive house you can afford, although some would argue to do that. Buy a house you know you can afford, even if you see a drop in income due to wage decrease or prices of everything else going up. Because that's no different. If prices go up 20% or prices stay the same, but you lose 20% of your income, what's the difference? There's no difference. You're still up in the same boat. It's just you feel better because your income's higher and you can use that money to pay for the extra goods you're buying. But it's a matter of being smart and having your margin of safety in the way you live your life.
Paul, what has inflation and interest rates done in the past?
All right, so we have more data on inflation, but just to look back at interest rates, and the reason I love this chart is, guys, back in 1980, we had such high inflation and low economic growth, we had to make a decision. And they increased rates like crazy. Look at this. It was 5% in the early and mid 70s, skyrocketed to 20% in 1980. But as you see, guys, interest rates have just been in a downward trend since Seth and I have been alive. Seth and I have been alive since 1980 and 1981, right? And it's just been downward trend. So asset prices are just going to go up because interest rates are lower, right? Now let's look at inflation. This is inflation going back to 1920. Look, guys, it's all over the board. This is zero. We've had times of deflation. This was Great Depression right here where incomes fell like crazy. A little bit here. But look, overall, what's the average? Probably around here. It's about 3.5%. And we've had really high inflation. So look, when interest rates were really high in 1980, inflation was really high. They had to use interest rates to bring that back down. That's what was happening, right? This is the stuff that has to happen. And guess what? It gets under control. Look at what happened here. It got under control. And now we see inflation rearing its ugly head again. So what can you do? Guys, just make sure you have margin of safety in your personal life. Don't overspend. Save your money. Make sure you cut expenses when you need to. And that will hurt the U.S. economy. But at the end of the day, you're more important. What's more important to you is paying that mortgage, paying those car notes, sending your kids to college, and saving for your retirement. Focus on that. There might be a time you have to give up Cavs tickets if you're a Cavs fan. You might have to give up a little bit at times, but it's only temporary. Look, guys, look at all these ups and downs. It's only temporary. Bad times don't last forever. Good times don't last forever. Remember that at all times.
If you're drawn to these value investing philosophies, we were lucky enough to interview Manesh Babrai, one of the most famous value investors out there. Check out this interview with him.